Today is Tuesday, January 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Happy New Year, fellas. Starting with the financials this morning, Alan. What changes are likely for the Fed Reserve policy this year?
I think this is going to be a pivotal year. First of all, the policies from last year will follow through in the first part of this year. And I think the Fed will be hiking rates by 25 basis points at the February 1st meeting, and then by another 25 basis points at either the March or April meetings. That would take the Fed funds rate to a high end of 5%. Or the range basically 4 3/4 to 5%. But then the Fed will probably remain on hold in the May through September meetings, and then lower the rate by 25 basis points in October or November, and then another 25 basis point reduction in December for a total of 50 basis points in the fourth quarter. So 50 basis points higher in the first quarter this year, and then a reduction of 50 basis points in the fourth quarter.
Alan, please tell us which economic reports are likely to have the most impact on stock index futures this week.
Okay, well, first of all, we have on Wednesday the 1 o'clock release of the minutes from the December 14th policy meeting. So traders looking for some type of clues as to what the Fed may do at upcoming meetings. Thursday, there's the December PMI composite that's guessed at 44.4. And then on Friday, probably the most important of the economic reports this week will be the non-farm payrolls, guessed at up 200,000, and the unemployment rate expected to be unchanged at 3.7%.
Lastly, Alan, what's your outlook for the U.S. dollar this month?
Well, first of all, the dollar had come under a lot of pressure last year, but today there is a very strong advance in the dollar, but I think it's by default with some inflation numbers in Europe, especially in parts of Germany, showing a smaller number, or a slower rate of increase. In fact, parts of Germany showing inflation at only 8.7% in December, down from 10.4%. So it looks like central banks around the world may be less hawkish, including the European Central Bank. So that tells me that a lot of the interest rate differential disadvantage for the dollar may be over. So today I'm looking for a move back off of these highs, but more of a sideways trade, and I'm becoming more neutral on the dollar index longer term, as central banks, I think, are likely to have policies more in line with what's happening globally.
All right, turning to the grains. Mark, let's start with the weather where there's grain in the ground. What's the latest on South American weather?
Well, as expected, beneficial rains did fall over some of the drier areas of Argentina and southern Brazil over the New Year's weekend. Coverage in some of these areas, southern Cordoba and southwest Buenos Aires, upwards of 1.5 to 2 inches of rain. Other areas received less than an inch, areas in central Argentina and southern Brazil, notably. So while the weekend moisture was certainly welcome, it's just not enough to completely ease drought concerns. The forecast for the rest of this week does feature a return to hot, dry conditions. Temperatures expected to reach upper 90s, even low hundreds in areas of Argentina. So looking forward, I'm starting to look for the USDA to start making lower production forecasts for Argentina. In Brazil, it's going to be a mixed bag. We'll look for higher estimates coming out of the central and northern parts of the country, that offsetting lower estimates coming out of Rio Grande do Sul.
Yeah, we'll have to continue to watch the weather. Mark, next week we have the USDA production report for corn and soybeans. What are your expectations?
Well, in both instances, I expect the USDA to make modest upward revisions to their final production forecast for the 2022 crops. In corn, I've found 3 years since 1990 where the USDA lowered their production forecast in October, only to turn around and raise it in November. In all 3 of those instances, the USDA followed up with a modest upward revision in January. That said, I'm looking for about a 75 million bushel increase to the corn forecast. That would take production just over 14 billion bushels. Similar story in the soybeans. I found 4 years where the USDA did lower the production forecast in October and then raise it in November. 3 out of those 4 years did feature upward revisions in the final production report in January. So I look for about a 30 million bushel increase to the U.S. soybean crop.
Lastly, Mark, as we begin the new year, how are the speculative traders, the funds, positioned in the agricultural markets?
Well, with the exception of Chicago wheat, money managers, they're long agricultural commodities. In fact, in the last CFTC report here from 2022, it showed the money managers were heavy buyers in that last week. They added over just 100,000 contracts to the long side. And this was the largest 1 week amount of buying by money managers in 13 months. And in some instances, the money manager position is starting to become a bit extreme. In soybean meal, for instance, their long position was nearly 130,000 contracts as of last Tuesday. Since then, additional buying has probably tacked on 13, 14, maybe 15,000 more contracts. So that would put their position at a new record high. So I do think that makes the soybean meal a little bit vulnerable to some sort of a correction here on some funds taking some profits.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.